Paranjpe of Wipro joins in though to talk about some concerns the IT industry has been facing. Girish, hi, good to have you on the show as always. First, word on these rumours or talk, Girish, that's been doing the rounds of very large-scale layoffs that Wipro might be looking at. Would you want to comment on that?
No, I think, I can imagine that there is a lot of concern because of slowdown in the IT industry overall. But we believe strongly that in our business, employees are the most critical part of what we have. So in this industry really is about clients and people. So we have to be extremely careful about how well we take care of our people and safeguard the best. At the same time, we have to, use this opportunities to trim our operations and to bring down cost levels so as to be competitive in the broader marketplace. But we will do that with extreme care and always to make sure that we treat people fairly and we kind of preserve the best and the brightest.
Girish, morning. Is that one way of saying that you will look at trimming some parts of your workforce? Or let me rephrase that. Are you going to be extremely conservative about any kind of wage increments next year or adding to your workforce or the fresh recruitments that you'll make in fiscal year 2010?
I think in some ways we were a little alert already last year, and we made probably the fewest number of hires from outside, and we kind of ratcheted up our utilization levels. We also made very few offers in the campuses, knowing that this slowdown was going to be there for a while. So to that extent, we have less of overhang as compared to some other people. But we are kind of continuing with that caution and making fewer offers, using as much of our bench as possible to fulfill new requirements, and going to the market for lateral hires on a very, very selective basis where we think there is talent available and which can help us on a long-term basis. But clearly, I mean, if you look at Indian industry, and that's, I would say, is one of the reasons why we have been successful, is that our demand-supply situation is really sensitive to the marketplace. So when there is a constraint on the demand side, we are able to bring down cost levels accordingly. So in the past, over 4 or 5 years, we've been able to raise wages by 12-15% depending on the year. But in a slow market, we are able to bring that down significantly.
You've yourself given fairly conservative guidance for the current quarter, Girish. But looking into fiscal year 2010, do you think it's possible, much that Wipro does not give annual guidance but only quarterly guidance, do you think it's possible for any large IT company to give or project for 4 quarters at a time? Or are the chances of going wrong very high in the environment that you're operating in?
Yeah, so I think because of uncertainty, I'd be not very comfortable giving a full year guidance, but then different people had different approaches to this. They may put out a number now and then revise it 3 months from now and 6 months from now. So you could do that or give a quarterly guidance and see how it works. So I think most people would not want to hazard a guess because there is so much uncertainty in the marketplace.
The other fear though, Girish, is that along with the volumes dropping off, pricing decreases will be far larger than what people are estimating right now. Would you say there is a risk that things actually slide below that 5% cut that people have been talking about in terms of pricing of deals?
I think I would say on a overall basis, the 5% seems to be the kind of relatively realistic number. What happens though is on a deal-to-deal basis, somebody may turn out to be more aggressive than somebody else, and that may create a feeling that, actually price pressure is extremely high. But it's probably more deal-to-deal rather than overall what we call on a client basis. If we renegotiate prices, we would be in that ballpark. Because I think what you have to bear in mind is that even as our wages were rising to 10 to 15% over the last 4 or 5 years, our price increase to clients has been within 2 and 3%. So we have absorbed a huge percentage of the cost increase just by higher efficiency, flattening the pyramid and so on. So we don't have enormous amount of headspace to be able to do significant price cuts. Where we can help clients, and I think this is where it is helpful, is that we can reduce costs but not necessarily reduce price. And what I mean by that is we could do much more work offshore, and as a result of that the client could save much more than just saying, cut price. Similarly, we could automate some stuff, we could prioritize some work, we could reduce some levels at which we operate. So through all of that, we can reduce cost much more significantly than just say reduce price.
I just want to also get your comment in, Girish, on what's been happening with the currency, because the fear is that Wipro will probably benefit the least from this depreciation, basically because you guys realize revenue at the hedge rate, a locked-in rate, so maybe the translation impact will not be that high for you. Are you relooking your hedging policy or even your translation policy?
No, actually, I think we have fairly held firm on the belief that we are in the IT business, not in the foreign exchange business. And, sometimes we win and sometimes we don't win, and that's fine, because as long as we can have predictable foreign exchange and we can plan our costs and, realization on that basis and give our guidance on that basis, we are okay with that. Because you could create huge volatility. If things had gone the other way around, it would have been all hurting very badly. So as long as we have a very well-articulated hedge policy and we share it with our board and with external shareholders, and we stick to that, which gives us comfort that there is limited amount of exposure that we carry at any point of time, we are okay with the outcome.
Girish, there might be no cartel in the IT space, but there is from what we understand, there's an unspoken or tacit arrangement or understanding between the large companies that pricing slashes will not happen beyond a point. It will broadly be in some kind of a band, as opposed to the BPO business, which is a free-for-all or used to be a free-for-all. Do you see the risk of any large player actually veering away from that accepted or that understanding of a price band because of revenue pressures and everybody else being forced to follow?
No, first of all, I think there is no cartel, okay? It's not as if we all confer with each other and set prices. But I think because we operate in the same environment, we access the same talent pool, we access the same physical resources, we have to face the same kind of inflation that exists in India. We have a similar cost base. So that's on one side. When you look at the other side in terms of analysts and our shareholders, they have the similar expectations out of us, which really constrains all of us in terms of how much we can veer away from a kind of middle band, which we have to manage both the costs on one side and expectations from shareholders on the other side. So I think that's where the situation is. So I would be very surprised if somebody kind of broke away and did something very radically different, because then they would either end up disappointing shareholders in a big way, or have to do something dramatic on the cost base, for which they really don't have that flexibility if they operate out of India.
Let me turn this question around and ask you in a different way. What if your clients or your top clients got around to telling you that, we are going through a lot of pain ourselves, we are making losses, we certainly would like to do business with you, but we don't owe you a 20-25% operating margin. So, you guys are doing much better than us. You're reporting 25% margins. At a difficult time for us, surely you can work on a 15% margin rather than a 25% margin at a time that we are making losses. That would not be very unreasonable as an ask for some of your top clients, would it?
No, I think whenever clients have come back to us and said, look, we are in trouble, we need your help, in almost every case we have said, let's talk about how we can help you. And as I said, if we can have an adult conversation around how we can help them reduce costs, which is what they're really looking for, rather than saying, how can you make less profit, then we can have a very constructive conversation. Because even today, with all the efficiencies that we have, we think there is still headroom. Because there are still areas in which we think too much work happens onshore. There are still places where we think we could do much better if we are allowed to manage the whole program on an end-to-end basis rather than do a co-management thing. There are places where if we had a 3-4 year outlook and a commitment from the client, we could do things on a much more automated basis and take out the effort that is taken today. So there are many ways in which we can actually lower costs for clients significantly and help them tide over the difficult period without somebody saying, but why should we make more profit? I think that's a different conversation from saying, how can you help me?
Okay, Girish, we'll leave it there for today. Thanks for joining in this morning. Wipro flat today.